In this video, we're going to be talking about why I believe that in the long term, you're going to be better off by choosing to have a 30-year mortgage versus a 15-year mortgage. I think we could all agree that one of the biggest decisions that people are ever going to make in their lives is to choose to buy a house. Yet they don't do enough of a research to see what's best for them, but they rather go with whatever most people are doing. If you give me 10 to 12 minutes today, I'm going to give you info that I promise you that will make you think twice before you make such a big decision. Stay with me here. My name is Andrew Pizzi. I'm an investor and entrepreneur out of Las Vegas, and I want to welcome you to the AP Show, where we'll be focusing on how to build a great life around health, wealth, love, and happiness, which I believe are all needed in order for you to have a great life overall and not in one just specific area. If you appreciate content like this, where I just put the numbers in front of you, please hit the like button so that you can push this content out to more people. And it takes me really longer to just do a video like this where I have to research the numbers, do the math, put together all the info, and then give it to you rather than just like scripting bullet points and giving you the info that I already have in my head. Also, as always, please feel free to leave a comment below if you think that by the end of the video, you still think that you should get a 15-year mortgage versus a 30-year mortgage. Like I always say in my videos, I'm a proponent of different points of views and debate, and in topics like this, I feel like people, whenever they have more points of views, they can make a more informed decision. And so please comment below with anything that you think related to this video, and if you agree with me or don't agree with me. So let's start with a basic foundational knowledge so that then we can go deeper into this topic. Whenever you're buying a house, you're going to be presented with the two most popular loan options, which are the 15-year mortgage and the 30-year mortgage. And on the most basic level, the biggest difference between the two is obviously one of them you pay it off in 15 years, and the second one you double that time that will take you to pay off the house to 30 years. And that alone usually gets people to just write off the possibility to do 30 years automatically. But like I said, hear me out here and you'll see why it might make sense for you to choose the 30 years. Now, let's review the pros and the cons of each one of the two loans. The pros of a 15-year mortgage are usually that one, you're going to get a lower interest rate due to the fact that one, your life is less likely to drastically change in 15 years versus 30 years. What I mean by drastically changing, I mean losing your job, being disabled to work, or anything related to losing your income and losing the ability to repay the loan that you promised to the bank. Reason number two is death. If you were to lend somebody $100,000 and they told you that they were going to pay it back to you in 15 years, wouldn't you be less likely to think that they're going to pass away versus 30 years to pay it back? That's the exact same way that the bank chooses to look at it. So again, the interest rate today is 6.87% if you choose to do a 30-year mortgage versus 6.25% if you choose to do a 15-year mortgage. And so when you think about it, it's almost a 0.5%. And when you're talking about that big of an amount for that many years, a 0.5% is going to matter a lot. Now, the second advantage of choosing to do a 15-year mortgage is that you're going to start building equity way faster in the house because of the fact that a lot of your payments every month are going to go to the principal versus just going to the interest. Now, the cons of having a 15-year mortgage is that you're going to be having a significantly higher payment every single month versus if you chose to have a 30-year mortgage. And that's going to automatically allow you to qualify for much lower loan amount when you're shopping for a new home. Let's now move on to the pros of doing a 30-year mortgage. The first thing is that your payments are going to be significantly lower because you're extending the loan for 30 years versus 15 years. The second one is that you're going to be able to qualify for a higher amount, which means that if you wanted that $500,000 home, you couldn't have afforded it if you did a 15-year mortgage, but now all of a sudden you can qualify for the house because you extended the loan for 30 years. Now, just like the 15-year mortgage, let's review the cons of doing a 30-year mortgage. The first one is that you're going to have a higher interest rate because of the reasons that we talked about previously. You're a higher risk because you have more probabilities that you're going to get sick or disabled to work or even pass away in 30 years versus 15. The second one is that because of the interest rate being higher, you're going to be building equity slower on a 30-year mortgage versus a 15-year mortgage. And then the last one is that it's obviously that you're going to be paying it off in double the time. So it's going to take you longer to pay off versus a 15-year mortgage. Now, to better understand the reason why people usually think that it's pretty stupid to get a 30-year mortgage, let me give you an example where I'll show you how much a house that is the same price would cost you after you do a mortgage for 30 years versus a 15-year. And then that same scenario is going to show you why I think that 30-year mortgages are the way to go versus 15-year mortgages. On a $400,000 home, if you choose to do a 15-year mortgage, your monthly payment is going to be $3,329. I can't believe I memorized that, but every single payment is going to be broken down into two categories. The first one is principal, the second one is interest. And then at the end of 15 years, you're going to end up having a paid off property, and it's going to have cost you $199,000 in interest to be having that mortgage for 15 years. Now, if you choose to do a 30-year mortgage on the same house, it's going to also cost you $400,000, but your payment a month is going to be $2,548 every single month, which is $781 more in your pocket every single month versus the 15-year mortgage. And now, just like the previous one, it's going to cost you after 30 years $517,000 in interest. After 30 years, you're going to have paid that much in interest, and you're going to also have a paid off house. Now, I know what you're thinking. How does it make more sense to pay $517,000 in interest versus only $199,000? I know what you're thinking, but hear me out here. Stay with me until the end, and I'll show you what the numbers look like if you stay with me. The first and least looked at thing in this scenario is inflation. What I mean by this is your dollars are going to be worth less in the future than they are today, which is a great thing, especially when you have a 30-year mortgage, because that $25-48 a month payment in 20 years or 25 years from now is probably going to feel like $1,500 versus $2,500. Because what you're doing when you're financing a house for the longest term possible is you're paying with current dollars in future dollars values. This is where the 30-year mortgage starts to make more sense, even though it's going to cost you more. The second and most important thing to look at in this scenario is the opportunity cost of the higher payment on the 15-year mortgage had you chose to invest that money somewhere else. Let me give you an example so that you know exactly what I'm talking about here with real numbers. Let's choose to look at scenario number one, which is that 15-year mortgage payment that will give you $3,329 of monthly payments that you're obligated to make. You start making the payments, and after 15 years, you have a paid off property, but you choose to continue to invest $3,329 into the S&P 500, and let's say that it returns 10%. And you continue to make that investment of $3,327 every single month until year 30. What you're going to end up with after 30 years is a paid off property, and with the investment of $3,329 every single month after the extra 15 years, you're going to have $1.3 million on the investment plus the paid off property. Sounds great, right? Now, scenario number two is the 30-year mortgage. And what you're going to do in this case is you're going to spend the same $3,329, but you're going to do it as follows. You're going to pay your $2,548 a month payment into your mortgage, but from day one, you're going to invest the $781 extra that you had by choosing the 30-year mortgage every single month for the whole 30 years. This is where things get shocking. After 30 years, you're going to have, again, invested the same amount, $3,329, but you invested $781 into the S&P 500 or whatever returns 10% to you. After 30 years, in scenario number 2, where you chose the 30-year mortgage, you're going to end up with a paid off property, but you're going to have $1.6 million in the investment by doing 781 from day one for the whole 30 years. It's crazy, but you're spending the same amount every month, but because of compound interest, you end up having $300,000 more by having chosen to do the 30-year mortgage versus 15. The last point I'll make on this video about a 30-year mortgage is more related to a real estate investor portion of it, because it relates more to the cash flow portion of investing in real estate. Cash flow is simply the amount that you are making on a rental property above what you have to pay every single month. Now, as you know, when you're investing in real estate, the higher the monthly payment is on a mortgage, the lower of the amount that you can qualify for with a bank. Therefore, the lower the amount that your cash flow is going to be. So, for real estate investing purposes, I would never get a 15-year loan because, again, it's going to kill your cash flow. Now, what I do though, in any of my rental properties or any loan really in general, is I always try to extend it as much as possible because of the cash flow and the extra payment and the more of a qualification for a loan amount that we previously discussed. But that's personally just me. I also do understand though, those people out there who are all about having the peace of mind of having a paid off property as soon as possible, or number 2, the people that know for a fact that won't have the discipline of spending the same $3,329 on a 30-year mortgage, even though your payment is only $2,548, but spending the same amount to invest the $781 every single month. So if you're one of those two, you either want to have a paid off property as soon as possible, or you won't have the discipline to invest the $781, then I would encourage you to do the 15-year mortgage versus a 30-year mortgage. With all of that being said, I'm not trying to convince anybody to do a 30-year mortgage or a 15-year mortgage because, first of all, I'm not a loan officer, so it doesn't benefit me whatsoever whether you choose to do a 15-year mortgage or a 30-year mortgage. All I'm trying to do is put out all the information that I could find and give you my opinion and my thoughts so that you can make an informed decision so that you can make as much money as possible on every transaction that you do. With all of that being said, thank you so much for watching. Please hit the like button, subscribe to the channel, follow me on Instagram so that you can get daily content from me there, and take care everybody.